So thank you everyone for joining us today on this webinar. We have three guests with us for today's discussion. Our first guest is Mr. Aiyappa, who is Head of New Initiatives at YourStory. A warm welcome to you, Aiyappa, on behalf of the entire team at Kristal. Aiyappa is an IIM alumni and Trichy alumnus with over 12 years of experience across e-commerce, business development, and consulting. He has previously heading online marketplace sales for Harman India and currently heads New Initiative at YourStory. As a business lead, he has played an instrumental role in building the presence for Xiaomi India, which is one of the biggest brands in the country right now. He has also been a D2C founder himself, having created an athleisure brand called Bamboo Tribe. After having this experience of being a founder himself, he is now heading Brands of New India, which brings together D2C startups, investors, corporates, and policymakers to accelerate the growth of India's D2C economy. A warm welcome to you again, Aiyappa. Thanks for joining us.
Thank you so much. Great to be here.
Thank you. We also have with us Mr. Manmohan Mall, who is the Head of Private Markets at Kristal.ai. A warm welcome to you as well, Manmohan. So Manmohan is an IIM Ahmedabad alumnus and is an experienced global investment banker. He has more than 18 years of experience across asset classes and geographies. Under his stewardship, Kristal Private Markets launched more than 15 private market deals last year and is continuing to grow at a very fast pace with innovative products like pre-IPO fund, ESOP liquidity program, and various other solutions for startups. A warm welcome to you, Manmohan.
Thank you, Anjali.
We also have with us another speaker for the team, and he is Mr. Shailesh Jha. He's a senior advisor in the private markets team at Kristal.ai. Glad to have you here with us, Shailesh. So Shailesh is a seasoned professional with more than 8 years of experience in asset management, private banking, and economic policy advisory. So we look forward to having a great learning experience about the D2C landscape and the investment opportunities in this space from all the three speakers here with us. So thank you to everyone who took out time to join with us today. Let's talk about D2C markets and the brands that we generally come across. There are many such small brands that might not be very popular to public at large, but we feel a special connection with them. Some nostalgic feeling that is associated with that brand. Maybe it's because of some childhood memories that we have. Maybe it's because of the quality of product, or maybe just the local essence that the brand brings, which is not really which is difficult to find in some commercial brands. And many of these brands are from the D2C sector itself, which are serving to us directly as a customer. So what is D2C brand? A D2C, a direct-to-customer brands are basically the brands which sells product directly to customers, either through an online mode or through an omni-channel mode. But usually they follow a non-retail store kind of a model wherein they focus more on the online model itself. So D2C brands are emerging from every part of the globe, be it winning the customers or attracting investors or achieving the unicorn status. D2C brands are doing it all and much more, in fact. So why don't we start with a quick poll in terms of just to understand whether you as a consumer have come across this particular sector or not. So there's a small poll on your screen right now. So if you have basically dealt with any D2C brands, if you are a loyal customer, just let us know in terms of what made you choose these D2C brands. Is it like the pricing? Is it the free deliveries or the freebies that they give? Or some niche product requirement which is not basically fulfilled by some large corporates? Or maybe it could be just convenience over the price. That's quite interesting. So basically, it's more like the niche product requirement which gets fulfilled by these D2C brands, or maybe the local flavor that they bring across on the table, which entices us as a customer. So I'll probably now hand it over to Aiyappa to learn more about the D2C market and the opportunity available for such a brand. So over to you, Aiyappa.
Thanks, Anjali. Once again, great to be here. I myself was trying to answer that poll, and I think I picked pretty much what everyone else picked, 58%, which is a product and niche. But I was told participants can't, panelists can't vote. But yeah, I think that itself says a lot about the Indian D2C market, right? In a lot of ways, they look at the Indian startup tech ecosystem, which has been for 14, 15 years that the Indian startup ecosystem has been around. We've predominantly been a tech ecosystem. But now there's a lot more acceptance for product brands, D2C brands like we call them. I know that itself is evolving rapidly over the last 4 5 years. We've been interacting here at YourStory. We've been interacting with a lot of these brands. Some of the standard steps that helped e-commerce grow in India, which is the internet penetration, with Jio coming in, with Amazon and Flipkart creating the marketplace model. But I think one understated fact in India is the fantastic tech stack that has been developed for the ecosystem, right? Whether it's payment gateways, whether it's logistics support, whether it is marketing automation. There's so many of the new market providers in the D2C market today that it's just so easy to plug and play and launch a D2C brand in the country. So the entry to the entry barriers in this ecosystem are very low. That is why you have a lot of these brands coming up. But what is also very interesting in the Indian D2C market is that not only is it what typically you would expect that they copy the US global market and the trends that are happening in the US come to India. But while that is happening, a lot of new innovation has also been happening in India, right? Like how Sugar Cosmetics, for example, have gone from the skin tone and how they're catering to it, or what Attenberg are doing, what the sleep company is doing. A lot of these Indian D2C brands have really innovated in this place. So with the mix of the internet penetration and e-commerce and the innovation that's happening in this space, and what we fundamentally believe that India is a brand deficit market. There are so many of the, growing up, the aspirational brands for us were the Nikes, the Under Armours, and of the world. But today, you have a lot of the millennials talking about demons. You have them talking about Mama Earth, Sugar Cosmetics. India has been craving for brands. We've had the legacy brands, like you mentioned about Anjali, that have been coming up. But with new age brands and the millennials coming up, I'm sure it's a number everyone has heard, the $100 billion number by 2025. That's a market number that almost every D2C presentation talks about in India. But US today is about a $150 billion market in the D2C space or more as of today. But we are rapidly growing up, rapidly catching. Quickly, I think three areas of interest in India that I think we should be looking out for. While there are a lot of subcategories and sub-industries in India, I think F&B is a space that we expect a lot of growth to happen. F&B is where we're seeing a lot in the pharmaceutical space happening. We're seeing a lot of plant-based protein brands coming out. The better for you, the health-based, the supplements, a lot of that's happening in the F&B space, F&B in the health and wellness space. The second would be the fashion space. Two areas are the streetwear and the athleisure wear, which are, again, in the US becoming big. And these are also trends that we expect to see pick up rapidly in India. I think worldwide, it's a 185 billion market, the streetwear market, around that number. But a lot more of that we expect to see in India as well. Made to order, the Shein model or the Fable State model, what they're all Fab Alley model, sorry. What they're all doing is also something that we're seeing a lot of trends of with manufacturers themselves going into the market and creating their own brands. And the last is the BPC space. Again, the beauty and personal care space in India is huge. A lot happening in the clean, sustainable, cruelty-free, paraben-free. A lot of education happening in that space of educating consumers about the advantages. That's where the poll, I see the niche requirements. So these are the three categories. Like I said, I think BPC, the beauty and personal care, F&B and fashion are three areas that we believe that in India already getting quite crowded, but with a lot of innovation happening, a lot of new entrants coming in, a lot of branding and marketing happening in this space. These are areas that we expect brands to become. We have unicorns already in the D2C space. We have Licious, Mama Earth, we have the Good Glam Group. We have so many of them already coming up. And as the market progresses, I expect a lot more of these sustainable brands being built in the country, actually.
Right, that's really great. Actually, that's quite an insightful, and probably Manmohan later can cover in terms of how the funding of the three main categories that you just mentioned is shaping up. But before we move on to that, we wanted to really understand what are the global trends shaping the Indian D2C market, and if you can highlight some trends in the different sectors that you have seen across.
Yeah. I think let me talk about these things, right? So it's a mix. Like I said, a few of the US trends seem to catch up in India. Like, for example, we're talking about nutraceuticals. Nutraceuticals has been around in the US for a bit, and it's a huge market there. The same market is picking up rapidly in India, the health and wellness gummies. So there is, like I mentioned, a lot of nutraceuticals. I did touch about streetwear, but even athleisure is another category, which is about 20% of the apparel market worldwide. In India, it's only 3% of the total apparel market. So there's a huge expectation that athleisure and streetwear will pick up in India, and those are categories to focus on. But that being said, I must highlight that, again, India has its own nuances. For example, there are question marks about the plant-based protein that we're talking about, right? Being very well in the US, a lot of markets, a lot of brands coming up. There are Indian brands coming up, but from the consumer sentiment perspective, there are still question marks there, according to me, whether non-vegetarians are going to switch over to a plant-based things. And fundamentally, we are a lot of a vegetarian country. So whether they're even okay with the texture and taste of like plant-based meat, right? So not necessarily everything that works in the US will work in India. That being said, I think we are a protein deficient country here in India. So a lot of protein supplements seem to be doing a lot better than the plant-based protein market in India, right? So there's some trends like the fashion space which seem to be replicated, but there are certain trends that are very India specific. And I think that is where, like I said, the innovation is happening, where especially the beauty and personal care brands are catering to, understanding that, hey, we're not making, like back then, the most of the options for women were Max, where you had like a 5,000 rupee product that catered to all, because they didn't understand women in India and the skin tones and how things were different. But Sugar has really cracked that market, making it very affordable, bringing in a lot of innovation in the space. And that's why, surprisingly, I see Indian D2C brands, actually not surprisingly, which is actually a good thing, catering to the Middle East. I think that's an area that Indian D2C brands can really expand to, going global. So it'll be interesting to see how, when it's a neutral market like the Middle East or Europe, how Indian and the US kind of D2C brands come head on. Europe is, again, very different ball game with the kind of certifications and things that they need. But broadly, yeah, I think there is a lot of scope for us to grow here in India based on the trends happening in the US. Like I mentioned, I think health, wellness, fitness is also a big thing. Gym equipments and things like that are also something that's picking up a lot in India and in the US. These are areas that I think will continue to explode both here and in abroad.
That's really interesting. Before we move on, let's do a quick poll over here, just to understand the medium through which you came across these D2C brands. So there's a short question on your screen. So where did you discover these D2C brands? Or did you discover it first through the online aggregators, or through directly from the website or app, or you have visited some offline experience store? Or is it like the social media and the influencer marketing model that they are basically, these D2C brands are widely accepting? So as a marketing person, I think this is really the answer that I was expecting, social media. So quite encouraging to see that. So yeah. So I think, Aiyappa, what has your experience been on the various channels used by the D2C brands? The general perception, of course, is that the first point of contact would be like an online marketplace or the social media. So is that true for a majority of the brands, or under omni-channel approach, are these brands also exploring the offline channel? What's your take on that?
Yeah, I think it's interesting. I think right out of the bat, social media and online is probably the best discovery platform, more specifically Instagram. I think that's the platform that has really done it, but it's also interesting that the trend seems to be changing, in that with the high customer acquisition cost happening on Instagram and the high CPMs, people are looking at new modes, right? Content and marketing and storytelling seems to be the new form. Community building is also a very interesting angle on which brands are acquiring customers. They're using community building as a tool to build a select set of community and then start building products for them. Right? Sugar did something along those lines as well. But from what I believe, yes, most of the discovery happens online. Omni-channel is the channel for all D2C brands to eventually grow. That is the holy grail, right? Since the days of e-commerce, since Amazon, Flipkart, since the early 2010s, achieving omni-channel is what Reliance, all of them have been trying to do, and what all D2C brands will eventually try to do. I do believe personally that on the online space, D2C brands, they might hit a plateau in terms of growth, in terms of their own channels, and marketplaces obviously are a channel to help you with your cash flows and your working capital and to keep them going. But what D2C brands, I do believe, how they do things differently is that they use the channel for not only brand building and communicating their message, but also taking customer feedback very directly from the market. And they're able to innovate, make changes fast, and go to market fast. But yes, the retail and the offline space is also probably at a growing stage. D2C brand is what they're all exploring into. And yeah, down the line, omnichannel is something that they will all go down.
Thanks, Aiyappa. That's really insightful. So let's move on to discuss about the private market space in the D2C market. So Manmohan, we would like to understand from you how D2C sector is performing in private markets in terms of funding and otherwise, if you have any specific trend to highlight.
Yes, Anjali, thank you very much. And quite an insightful commentary from Aiyappa, I must say. reflects his deep experience in this particular segment. From private market perspective, we strongly believe that the D2C brands will have a significant role to play in shaping up the consumer products space in the next 5 to 10 years. Just a bit of a history, we have seen the Gen X being very familiar with the web. That's when it started. The millennials just got comfortable with it, did a bit of online shopping, transacted to some extent online. But the true next generation, the Gen Z, they are the ones who would be the real powerful user of the online medium, right? That's where they would engage, discover new ideas of brands, and consume online as well. So we believe that the D2C model, which relies significantly on the internet being present everywhere, would give a serious challenge to the brands, the legacy retail systems that they've been relying on, and be super competitive in terms of how those traditional brands have operated, right? What the new age consumer would be looking at would be a seamless purchase experience. The algorithms that the new age D2C brands would be offering, wherein they will be targeting the customers based on their preference, based on their user behavior, the full online sales experience that the consumers can enjoy. That's what they would be looking for, and that is a big plus for the new age D2C brands to leverage on. In terms of the funding, it's very evident that the segment has grown significantly. Just to give an example, the D2C brands alone, they raised around $497 million in India last year, and that compares to $170 million raised by D2C companies in 2020. So there's almost a threefold jump in terms of the funding which the segment witnessed, right? And I'm sure if you look at other markets, even US, you will see a similar boom that the markets have witnessed across, right? Actually, if you can pull a graph which demonstrates the funding history over the last 5 years in the D2C segment, I think that will help the audience understand the importance that the investors have attributed to this segment.
Sure, Manmohan.
So as is very clearly evident, the trajectory is sharply upwards. So from 2017, wherein still there was a meaningful amount of activity and funding which was going into this space, right down to 2021, where the funding has taken astronomical proportion, we see a significant growth there, right? Both in the number of transactions that would have happened and also the amount clearly. And in the Indian context, $500 million getting to D2C is not a small amount, right? So it's a fairly encouraging sign in that respect from a funding perspective, Anjali. So, and rightfully so, because some of the early D2C brands which went public, we have witnessed, the market has witnessed huge amount of success in those brands, right? So just to give a couple of examples from markets outside of India. So looking at HelloFresh, looking at Yeti, they went public a few years ago. And the way the asset has performed on the public market, at least until last year, significant jump in terms of valuation. But in line with the rest of the market, we have also seen correction in those assets as well. But where they started a few years ago, probably would have been a tenfold increase in terms of the valuation and so on. So clearly there was a motivation from an investor perspective to back this sector. They have witnessed growth, they have seen profitability, and hence the funding has always been in line with that growth.
Great, that's really interesting. So, in fact, before we move on, why not we take some questions from the Q&A box? So, Aiyappa, I think this would be a question from you in terms of what do you think about the consumer Internet of Things industry, such as smart products? So maybe you can throw some light over there.
Yeah. So I think this is one of those trends that I think has picked up extensively in the US. We have worked with a few brands here in India, like Alistair Technologies and a few others, who are building products in the consumer internet space. They have been, but honestly, I feel the ecosystem is not fully developed yet because we are predominantly an Android reliant country. So we have Alexa and Google doing pretty well in the IoT space. In the Apple ecosystem, there's still a lot of products to be built. US, that's quite a robust ecosystem. In India, we're still doing there, but What's happening is with a lot of the prop tech also coming into play, and prop tech is another segment that's really booming here in India. With prop tech coming into play, there are areas where they're integrating the both, and people are buying houses today with IoT-enabled houses. IoT companies are not seeing as much success on the consumer front. They're seeing more on the B2B side, where they're enabling directly with construction and real estate houses of the country. It is an evolving industry. I do think there's a lot of scope to it. I think the ecosystem has to still be built a little more significantly, because India's internet penetration is predominantly on the mobile front today with Jio. The broadband penetration is still relatively low compared to the mobile penetration. With that expanding, I do believe the IoT sector will come into play shortly, but I don't think we're anywhere close to where the US is, and there's a lot of scope to grow in that space.
Got it. Yeah. Thanks, Aiyappa, for answering that. Before we take other questions, let's go back to the topic. So Manmohan, you mentioned about the funding that the decent D2C brands are receiving. So before we move on, I think specifically to all the founders who would have joined us for this webinar, it would be really interesting to see this. And let's see in terms of this poll and how people react to that. So basically, there's a short question on your screen right now. So, of course, D2C brands are available across the different consumer products that we come across in our day-to-day lives. But which are these products for which you might choose a D2C brands over a large brand? So there might be some preference, there might be some pros and cons that you might be doing in your mind, and would be selecting a D2C brand over a large brand. So which would be the category where you will probably opt for that? Great. So yeah, much in line with the expectation, fashion, beauty, food and beverage, of course, that played a major role here. That's really interesting. So basically, now that we know as a consumer preference what is prevalent over here, we would like to know more about you, more about this particular topic from you, Manmohan, in terms of which categories within the D2C has been doing very well on the funding. And this probably is more relevant to the founders who have joined us today for the webinar. Over to you.
No, absolutely, Anjali. I think not very surprising, and in fact, pretty much in line with what the response has been to the poll. And that's where we have seen significant amount of funding going into. So the three areas which really stood out in terms of being more attractive from an investor point of view would be the beauty and personal care, the fashion, and after that, the food and beverage. So again, what Aiyappa earlier mentioned around the three segments, which would be the biggest focus from a consumer perspective. And again, the investors obviously are looking for what the consumers are looking for as well, right? So that's where the funding has happened. Thanks for sharing the graph as well, which is quite evident. So between 2017 and 2021, beauty and personal care attracted almost $500 million of funding, significant amount in the Indian context again. Fashion tech, 300 odd million, and mom and baby, 154. So FMCG and grocery probably is still on the bit of lower end, but I also agree with Aiyappa that this probably could be one big focus from an investor perspective, where new money would be attracted within this particular segment. So that's where I also agree that this top three sector of focus from an investor perspective will be these three. And again, just to highlight, why that is the case. Look, from our perspective, the companies that we've looked at, the sectors that we have looked at, we believe there could be three main reasons as to why this is interesting for an investor. There's a higher gross margin, and obviously it's understandable as to why that is the case, where people are less price sensitive when it comes to beauty products. There's a tendency to have a repeat purchase. Once you've liked a particular brand, once you associate yourself with a particular offering, you would want to go and buy that again, right? So there's a bit of a repeat customer behavior that is evident there. And lastly, it's much easier to discover these brands online, unlike, let's say, a furniture or some other D2C offering that may be there. But when it comes to a beauty product, when it comes to a fashion product, through the influencer marketing, to other channels which are omnipresent, these are much easier to discover online, and hence natural tendency to gravitate towards these products in the D2C segment.
That's interesting. So Manmohan, what do you think? Is D2C the right bet for private market investors?
It's definitely an area of interest, and I'm sure there are good reasons for that. What we believe is that for private market investors, especially for investors who have a track record, who have an experience in terms of running their own businesses, even though the traditional businesses and so on, it's a fairly interesting opportunity for them to look into this space as well. Why is that the case? Again, based on the work that we have done so far, we see there's a huge relevance of that know-how of running a old school brick and mortar business is extremely relevant when it comes to, again, the new age D2C business channels, because that expertise, that experience seem to be missing, right? And that's where I think the investors who have that experience can really come in, make the investment, and if they have the time and energy, they can obviously contribute in terms of making a difference to the business itself. In many cases, in many situations, they tend to be in a better position compared to a VC, wherein they can bring that business understanding to guiding a D2C platform much better as well. Second, we believe that the capital burn rate for these D2C brand compared to, let's say, some of the other businesses which are there is much lower, which obviously makes it much more interesting as an entry point for a private investor. So even with a smaller check that they would write, they, in a small way, would be making a difference, whether it is like helping build a toxin-free bath product that they would want to see their kids use, or even investing in some traditional handicraft or culinary heritage that is disappearing very quickly and supporting that cause. Right. So there's a bit of a softer benefit that one can associate with making these investments. So it is satisfying because you see that money that you spend has an ability to do some good while you do well as an investor as well. And hence there's a natural case for people in the family office space, people with the background of running successful businesses to come in and make investment into this asset class as well.
So true, Manmohan. I think the feel-good factor is definitely one of the softer aspects that people look at. And now that we know what consumers and investors are looking for in the D2C space, let's go back to the founders of these brands. So Aiyappa, we would like to understand this aspect from you in terms of what are the founders of these D2C brands looking at, and how is Brands of New India, as we know, Brands of New India is helping these particular D2C brands and by giving them a platform to tell their story, not only to their customers, but also to the investors, policymakers, and other key stakeholders in the ecosystem. So what's your take on that? Over to you.
Thanks, Anjali. So I think before I go into Brands of New India, I think I like that question as to what are founders looking for, and that's where we started with Brands of New India. We've spoken to a lot of founders in the D2C space. We have engaged with close to 1,000 plus D2C brands across the country at some form or the other, and most of the standard things that we have heard, while you do have operational issues such as manufacturing, backward logistics, delivery, payment issues, most of them seem to be getting fixed or on their way to getting fixed. A few of the issues that we've encountered from founders, and this is one pertinent one, is about, and I see some question on that as well, is about branding and storytelling, right? Most brands believe that, hey, I have a product out there, I use Instagram to do my performance marketing, I increase my spends, my sales go up, I reduce my spends, my sales go down. Products are being built, people are able to sell products, but the brands are not being built. Like I, for example, I've eaten, I think, about 9 to 10 different healthy ice cream brands out there, but I don't remember which brand I bought from, right? And this is a common behavior that's happening in the consumer market, where there's a lot of copycats and likeness happening, and it's very hard as to which is the brand that you bought from. The brand building is not happening while the products are being built. So that is one area I think a lot of founders are trying to solve for, as to how do you do your branding and marketing. Not necessarily from a paid way in terms of performance marketing, but in general doing brand building without having to spend extravagant amounts like the big houses in terms of billboards and things like that, right? How do you have your story and your brand ethos in place? That is one thing that we've got feedback on. The second thing with slightly more mature brands is, about going global. And that's another trend that we've seen. How do you grow global? How do you change the market fit? How do you test the markets? These are the two areas that we see that a lot of brands, depending on which phase of their growth they're in, they're looking at. Obviously, I think Manmohan and Shailesh are the right people here. Investments, funding is something that all founders at some point do have queries on. But I think what's good about the D2C ecosystem in the market is that the metrics are very measurable, very tangible. very easily identifiable metrics, and even as an investor, you do know what you're getting into. You do know what the areas you're investing into, how a brand is growing. It's a very black and white area that way. So that's why I think this is a very interesting market from an investor standpoint as well. Now, coming to brands of New India, I think there are four things that we're trying to achieve here. Mainly, we're bringing together the four key people in this, who we believe are the key people in this ecosystem. Front and center are the D2C founders themselves, because the Indian startup ecosystem has been tech predominantly. We've been doing a lot of coverage for them. We wanted to start focusing on the products and the brands in the country. So the D2C founders are the first main part of this ecosystem. Second would be the enablers, such as the payment gateways, the logistics providers, who are enabling these plug-and-play solutions that get D2C brands to the consumer. The third are the investors, who are financing and helping with not only equity investments, but debt, revenue-based financing, working capital management. You have a plethora of investment options today for the industry, which in itself is very unique in this industry. And the fourth would be the government. We are engaging extensively with the government in different departments, and how we believe that this is an industry that needs its own set of regulations that can help it grow faster. It kind of fits into the government's Make in India policy, so it kind of is a national fit that way. But these are the four key stakeholders in our space, and that's what we're doing with Brands of New India. It's a platform for events, content. We are helping brands with the branding and storytelling from the founder's perspective. And on the back end, we also do investor connects. We do a few closed room learning sessions. We have a D2C founders community as well, where we do meetups. We've traveled to a few key cities in Bangalore, Bombay, Delhi. But more interestingly, the team and I are looking at newer cities such as Jaipur, Kolkata, Chennai, which are metros, but from a D2C perspective, 85% of your D2C brands are in Bangalore, Bombay, and Delhi. But I think a lot of the other cities do need a lot of handholding in terms of getting the right infrastructure in place for D2C. It's not that it's not there, it's just the awareness that needs to be built a little more. So that's something that we're working on extensively. And we have a lot of partners who are also very interested in working with these brands in the other towns, non-Bangalore, Bombay, Delhi. And that's what Brands of New India is trying to achieve.
That's really interesting work that you guys are doing over there. So I think before moving on, there's a question on monopoly. Probably I'll ask Shailesh to take that. So the question says that how are the new D2C brands affecting monopoly level businesses in their respective industries? So Shailesh, do you have some kind of view over there? And probably if you want to highlight with some specific examples of certain brands, D2C brands who have helped, coming out of this monopoly structure in the industry.
Yeah, definitely. One of those things that you usually have, particularly in consumer product goods industry, is that most of the brands will target the main part of the bell curve of consumption, like what most people consume and what they generally do. So monopoly arises when you are trying to have a DNA of catering to the lowest common denominator, but you're over engineering things. A great example of that would be Gillette. For years and years, and men here know this, Gillette has been like selling people, shaving handles, razor handles, and shaving blades have been very, very expensive. In fact, there was a joke that The Economist did, which said that the rate at which Gillette is growing, by 2100 AD, will have probably 14 or 15 blade razors, because they seem to be adding one every 6 years or 7 years. So the point is that, do we really need so much? Or do we really need so over-engineered, not even just the razor blades, but even mattresses? What really some of these brands, particularly not in India, but outside of India, have done is that they have taken away the complexity that is involved, and they have deconstructed the entire process of purchase. They have taken out that part. And what Monopoly has been able to do is that they have been able to overcharge for attributes that people don't care about, or overcharge for attributes that are created because once somebody says that you look good in this, or there's this added benefit which is never proven, you just pay a premium to buy it because other people buy it. And that has been the problem with a lot of these consumer product goods industries, or things that you really don't use on a day-to-day basis. When D2C brands came in, they came with like a single or double product line. And they said that, we are just taking out all the frills, just providing you a common minimum baseline product and just see how it happens. And that's been one of the reasons why you had brands like Bonobos that was purchased very recently by Walmart, or brands like Dollar Shave Club, which was recently purchased 6 years ago, purchased by Unilever, because what they were doing is that they were challenging the monopoly pricing power, where the pricing was created on perceived attributes. If you go into microeconomics, and there was no reason why somebody should be doing this over that. So they just stuck to the comfort factor, or just stuck to the the utilitarianism factor, and created a new thing. And this has been shown that in general in the US, just going down to the razor blade example again, in general in the US, and particularly amongst the younger men, the trend of doing two things has gone down. One is that people are no longer like looking for razor replacement, and secondly, I would say the incomplete. I mean, the stubble look is back. That again comes from the fact that the very famous quip from King C. Gillette back in 1930s, when he said that I have done more than any man to change the face of this world, when he was basically saying that I have brought in the clean-shaven look back. So those two things kind of remind me that some of these brands have done what they've done is that change consumer preferences, model them towards the thing that there is no need to actually conform to a particular look and overpay for that. So in that sense, consumer preference monopoly has been broken.
That's interesting, in fact. So that gives like a lot of scope to these D2C brands to cater to different segments once the monopoly has gone away. But that's just one part of, I think, impact investing, Shailesh. Would you like to touch upon what's the impact angle on locally sourced and smaller versus bigger, smaller brands versus bigger corporates? So can you throw some light on that?
So yeah, if we have to actually look at local brands, and how locally sourcing and D2C has really helped, I'll probably take a step back and take you to India of the pre-internet times, and how one brand, which I believe is a forerunner of D2C, 1950s, 1960s, all of us have read in the school about the White Revolution or the Amul Revolution. That, to me, I think was the first time when somebody attempted D2C, where the producers became the distributors, and the feedback about the product was much better internalized into product innovation. So there's this story of how Amul itself actually defeated the Polson Dairy, which was a British-owned dairy in the post-independent India, where locally sourced products, probably in the first time in our history, were able to compete with MNC products. And the reason behind that being, one, that you had producers who were much better able to understand what the product quality was, and secondly also because distribution cost was not being lost into a lot of upselling commissions, because the people who were producing were also mostly people who were distributing. Now Amul is a very different company. Now it's like you find all of its product in retail stores, but its initial story is of D2C. And the other thing is that this is still there in a lot of these organizations and a lot of these cooperatives. We still find that DNA, and that has now been enabled by the rise of the digital, I would say, frameworks, or rise of the digital global digital platforms, to really take it to multiple places in the world. So I was a few days ago, I came back, I was watching this documentary about a lost craft in actually India and Pakistan. So some of us might have seen this picture from Indus Valley civilization of a guy wearing a shawl, and that shawl has very intricate prints, and it's like a 5,000-year-old technology, and somebody somewhere in the Sindh in Pakistan and western part of India was just selling it, and that product was being sold for like $50 or $55, and nobody was really, given the quality that is there, nobody was paying for it. And over the last 2-3 years, and there is a business inside a documentary around it, last 2-3 years, somebody was able to take it abroad and sell it to really discriminating and really luxury conscious consumers, and people who are like living there have been able to revive a craft because there is so much more demand in it. And you think about it, like for people in South Asia like us and people in Pakistan, Bangladesh, Sri Lanka, like this is a heritage that was saved simply because somebody could identify a consumer segment and somebody was able to sell that online to someone. So, there is a lot of E that is being talked about in consumer in D2C, because there is toxin free, there is paraben free. This is an example of S, and obviously we have talked about an example of G when we were talking about breaking of monopolies. So the D2C brands have a role to play, which doesn't mean that all D2C brands are playing this role, but they have a very important role to play in, if you are looking as an investor into sustainability. One more thing that I think it really resonates with, like a lot of local production movements across the world that are happening, is that it kind of also is something that as a country, and as an emerging market country with a lot of tradition, we should look at, because this is something that is going to empower smaller communities, smaller group of micro entrepreneurs, and going to be really very useful for them to get a global stage to, and also find a very niche customer segment for their products, which might be missing because a traditional CPG brand might not be willing to spend too much time, energy, and marketing budget on products which are very, very niche and very difficult to reach.
That's really interesting, Shailesh. So my next question is for Aiyappa. So Aiyappa, government has been talking about open network for digital commerce. So one of our audience basically wants to know your thought in terms of what impact ONDC will have on the D2C brands.
Thanks, Anjali. Very interestingly, this is something that we have been discussing in our office, and our sister publication, the Cap Table, even wrote an article about ONDC and its impact on the D2C industry. ONDC, what at least the government's objective with it is to be like the UPI. What UPI and NPCI did in the UPI and the payment space is what ONDC aims to achieve in the e-commerce space. On paper, theoretically, what they're trying to achieve is, yes, to get seller onboarding easier for platforms. So you have an entire network of sellers that are out there and brands that are out there who can easily onboard onto respective platforms. And from a brand and a seller perspective, it's also very easy to sell across platforms without having to go through the headache of onboarding and getting yourself listed on each of these platforms. Like I mentioned, I think it's a very good initiative. I think it's still in its infancy stages. The implementation is what we need to see how it goes about it. But if it goes as per the plan, it should make things very interesting. It should break the barriers between over-reliance on certain marketplaces and have brands be able to sell across multiple channels. I think it also becomes competitive for brands from a margin standpoint in terms of what marketplaces will offer them, because your options do increase. Your marketplaces, you're not really confined to a few specific marketplaces. But that being said, I would like to still stress upon the fact that it's in its infancy stages. We need a few of the bigger platforms to accept their own DC proposal. While they have accepted it, the implementation part is what we're keeping an eye on to see how it goes about. And with a few new entrants who are also coming into the market, it will be easy for them to kind of build and scale rapidly. Especially if you're a marketplace trying to enter the market, ONDC is probably your easiest way to onboard new brands and sellers. So it will be interesting from both a marketplace standpoint and from both a brand and seller standpoint.
Thanks, Aiyappa. You talked about new entrants. So there's a question very similar to that. I'm not sure which sector is this question intending to, but I'll just read out the question for you. So one of our audience basically wants to know who and how large is the target market and all the brands competing in this for the same TG, and hence is there a space to absorb continuous inflows of new brands? I'm not sure which sector are they referring to, but if you can give a generic answer over here.
I know, thanks. So I think in the interest of that, I will keep it as generic, and I think you're trying to address the overall consumer buying audience in India. Who are your paying audience in India? Again, there's so many different numbers that you hear, right? Especially if you're looking at a founder trying to pitch to an investor, typically you'll use a 1.4 billion population in India and say, I'll get a 1% of it, 5% of it, 10% of it. There are various cuts and dices that brands do. But I actually like what Nikhil Kamath wrote yesterday on Twitter on the Zerodha piece, where he tried identifying the addressable fintech market, which kind of applies to the consumer buying market and the disposable income, and a market with more than 2.5 lakh annual income in the country. What Nitin Kamath did say was, he said it's about 150 million, which is about 15 crore Indians, right? He has used a fair level of approximation, but I think that number seems reasonable. We've heard a few more founders also talk about that number, but that 15 crore or the 150 million market seems to be the paying audience from what we've heard. Again, this is discretionary. This is based on IT returns, and they have used some level of approximation in there. But this is the type of market, that overall market. Obviously, In fast-moving consumer products, it's larger. For niche products, it will be smaller. But for this question, I think that's the kind of number that we would put out there.
Right. There's another question which is basically I like you to answer. So basically, the audience wants to know in terms of how can a brand with a very large business in marketplace become successful in D2C? So if you can throw some light on that.
Yeah, and this is again this comes back to the branding and storytelling, right? A lot of these brands are able to sell on Amazon and Flipkarts of the world and the marketplaces very well, and they pretty much do it on the pricing strategy. Selling on the D2C channels starts becoming harder. But I have to add a caveat here that even some of the most successful D2C brands in the country today, their own D2C channel, especially the online channel, will do certain part of their sales. There are some niche brands that predominantly do only on their website, but the slightly more mass brands, and I also see one question on FMCG that they spoke about on how do you scale, right? The slightly more mass brands, while retail is an option, one trend, and I'm sure most people here are aware of it, is quick commerce. Quick commerce is a trend with your Instamart, Blinkit, Zeptos of the world, especially for the FMCG space in terms of your margins and your costing, seem to be a viable alternative for now. Again, in infancy stages and it's growing, but it seems to be a promising area. A bunch of the F&B brands that I have spoken to have told me about the power of quick commerce and how a majority of their sales that were on their marketplaces have now moved to quick commerce. That seems to be a trend that's really catching on in this space. But for brands who are over-reliant on marketplaces, yes, I would say that there have been areas about offering a few exclusive products. Pricing doesn't seem to be the strategy because the price crawlers on each of these sites, but offering a few exclusive brands, a few products only on your D2C channel seems to have worked for a few, not for everyone. But I think all of them realize that it's a mix of a strategy where your marketplace will be a cash flow, but building a brand, taking customer feedback, building out your strategy. It's also challenges on your own D2C site is with, like I mentioned, Instagram, CPMs and CACs going up. That also is a new challenge that brands are facing. So it seems to be a cyclical thing that is happening right now. I would suggest that you embrace both, find the right mix of it, maybe for slightly more premium items such as home decor and slightly more high-end items, D2C channels seem to be preferred because there was always a question of returns and customer support and how you manage it. And that's where D2C channels tend to stand out more. But for more FMCG and fast-moving goods, marketplaces and quick commerce seems to be the solution for most of these brands.
Right. Since you have talked about pricing and you briefly touched upon FMCG as well, there's a question very pertaining to FMCG. Basically, I'll just read that out if there's further thoughts on that. So FMCG typically has low gross margins and lower price points. So the person wants to know in terms of your thoughts on this sector and how the sector can overcome the cost challenges related to logistics, and what are you seeing D2C brands in this space doing to achieve profitability in the long term?
Yeah, this is a very hard industry to crack. I'm being very honest about it, right? FMCG. You are basically taking on the HULs and PNGs of the world. Let's be real about it. While D2C is a good channel and a good buzzword and trend in the industry, you are taking on brands in the ecosystem who have figured out most of the supply chain. I think what is important and how most of these FMCG brands have scaled in the country so far, the D2C ones who started digitally first ones, all of them have built a successful brand online. They have created customer affinity because with FMCG, it's all about getting a brand preference, right? If you're able to get a brand preference and you have your product market fit and you have high repeat from your customers, then it's all about going offline with the right strategic paths, right? There are certain partners we work with here as well who help you set up your own offline store. And I'm not even talking about a full-fledged offline store. You can just rent out a store for 3 months in a mall and kind of set up your units there. So they started testing out markets. So you can test out 5 locations in Bangalore, see what works, and then go into a full-fledged offline strategy. But what I'm getting at is, yes, offline will, for an FMCG space, offline will always play a crucial role, especially at the growth stage. You might be able to reach a certain level of revenue online. You might have, your marketplaces might enable that. And now with quick commerce, you might go even further there. But I think offline will have to come in at some point, maybe after a certain amount of revenue. Logistics, I constantly hear, is an issue. There have been meetings we have done with our logistics partners, and this is a constant issue on how do you bring down logistics costs for less than 500 gram products. Products that weigh less than 500 grams, right? Volumetric weight, small volumetric weight, why are we paying so much of logistics costs? Aggregation doesn't seem to work as well in the logistics space simply because consumers are used to 1-day delivery, 2-day delivery, fast delivery. And if they're not experiencing that, they'd rather go to the offline store and receive it there itself. So logistics, there's no right answer right now for FMCG. Unfortunately, I don't have that. But I think as you grow, exploring more channels, going offline, tying up with the right distributors. I also want to caveat is that a lot of the traditional offline distributors are now embracing D2C brands. Brands that I know of are only traditionally distributing the biggest electronic brands in the country. Today have taken on upcoming wearable brands and tech brands and are taking them offline. So you can leverage them to reach all corners of the country and help with your logistics cost.
Right. So basically, an omni-channel could be a way, as of now, what it seems like. So there's a interesting question on Thrasio, and this question I would like to ask from you, Shailesh. And so there's this question, I'll read it out for you. What's the scene with the Thrasio clones for next 2-3 years, both for them and the kind of resellers and brands which fit in the investment theses? So what's your take on that, Shailesh?
So, like everything in the market recently, like Thrasio or any kind of like e-commerce D2C aggregators, they have seen a big moderation in prices, and that's known to everyone. But we believe that something that Aiyappa has been highlighting for such a long time is that to get it right, you need to probably get the logistics right. You probably need to need to get the customer experience right, and to a large essence also your analytics also right, because you cannot for a sustainable business you do not just depend on one product. So what these e-commerce enablers are doing, that if you have a long-term kind of confidence in the future of D2C, or very, very focused or very, very direct to consumer discover online brands, then there needs to be a SaaS infrastructure underlying that. So that is, I think, our more bigger conviction around Thrasio or Thrasio style brands. The problem is that in this entire sector, some of the investments that we'll see, some of the companies that we'll see will be optimal, some will not be very optimal. But what we believe is that there is space for somebody to come and solve this problem. And to an extent, Thrasio has been able to do that. A roll-up strategy where somebody builds the AWS for D2C, where somebody addresses all the challenges that startups face, right from getting discovered to shipping their product to even what people are now talking about in India, the pin code based pricing. Somebody solving it for startups and letting the founders focus on product innovation, that is sorely needed. And that's what our conviction around Thrasio style companies is. Manmohan, I would like you to also give your thoughts on this.
Look, I agree with that, and that's what we have seen work out so well for Thrasio. And it's a similar platforms. Mensa, obviously, 1 year into the making, already a unicorn. So there's a very clear case for these platforms to make a difference in the D2C space. So nothing more to add to what Shailesh you have shared on this thing, and fully concur with your view on this.
Thanks, Manmohan. Thanks, Shailesh. Mindful of the time, we are almost the time of the webinar, but we have some open question. So I'll quickly take up some of them. Probably we can cover the rest offline. And for any questions on this subject matter or elsewise on the D2C or on the private markets, if you have any further question, you can just contact us offline. And meanwhile, I'll just take a couple of more questions. So, Aiyappa, what's your view on the beverages segment on the D2C market? Do you see this category coming across?
Yeah, I think with beverages, so food and beverages, but specifically in beverages, I think there's a huge focus towards healthy beverages. I don't want to say, I mean, there's a term called better for you, not necessarily the best out there. It's not the best in terms of your health and the calorie intake, but better for you seems to be a market that's really picking up. Better for you in the beverage space, where it's better than the alternatives like the cola drinks in the market. It's not as harmful to your body, but it's an area that is of interest. People are getting more conscious about what they put into their body, whether it's food, beverage, and this stuff. And also in the fresh space, what Raw Preservery tried doing, although it did get quiet, but they are facing challenges from a logistics and a supply chain standpoint in delivering it on time. Beverages market in India, while online has seen quite a few of them, I think quick commerce and offline is where a lot of the consumption is happening in the beverage space. There seems to be a lot of innovation happening in that space. but most of the brands that are innovating in that space, I don't see marketplaces being as successful as what a quick commerce or an offline store seems to be doing in that industry.
That's great. So there's a question around the branding part. So probably this can help all the founders of D2C brand joining us today. So so the question goes, as the branding goes a sea change and brand perception goes fast. So how does a startup go about branding? So if you have quick tips over there for our founders.
No, I mean, unfortunately, and this is a constant question, like I said, we get here at YourStory. And I think there is a no one size solution that fits all, right? That is what the beauty of branding is, and that's what makes you stand apart when you are a brand. But I think what is important, a few things to keep in mind is a lot of times when people do, and we were checking the heat map analysis of a few of the brands that we work with. Typically, when people do come to your website, especially your own brand site, a lot of brands do this mistake of not having their About Us page or telling why they have created what they have or about their brand much. They seem to be on the price game there, not focusing on who they are, what they are. People love putting a human face to your brand. They want to know who is behind this brand. Heat map analysis says almost 25 to 30% of the consumers coming on a website go to an About Us page to read more about the brand and the thing before they buy from it. So creating that sense of credibility, creating the sense of genuineness, because everyone's aware there are a lot of fake websites out there, there's a lot of fake products out there. Building a brand, be clear what your messaging is. Be consistent with your messaging across channels, whether you're doing it D2C, whether you're doing it offline, whether you're doing it online, wherever you're selling it, be consistent with your messaging, which anyway most brands are doing. But what has helped, Shailesh touched upon this broadly in this example of the razors, and I love that example, is that what D2C brands have done differently is they're listening to consumers. They are listening to their consumers irrespective of which channel the sales are happening, whether it's a distributor, whether it's a quick commerce, whether it's through modern trade or LFR. If there is a product complaint, if there is a issue with the product, the brand is taking it on themselves and not leaving it to the distributors to handle it. This is what makes brands, this is what builds a brand love. This is what a lot of people forget, that it's not only the sales, but even the after sales that's supremely important, which a lot of the successful D2C brands have cracked successfully. So that is one of the areas that a lot of the brands need to focus on. But unfortunately, there's no one solution for branding and storytelling. Create content around it. Like I think in the beauty and personal care space, a lot of, I forget the term, skintellectuals. Yeah, I think skintellectuals is the term that they call it, where they educate the consumer about the brand. About how do you look at your skin, how do you look at the different parts of it, and then they suggest a suitable product for you. Educating your customer about the brand, about the product is as important nowadays before a consumer buys it. And that helps build that relationship with the customer, and then the repeat becomes high, right? So especially if you're a brand that has that's looking at a lot of repeat customers, that's maybe something you want to focus on.
Thanks, Aiyappa. We have a lot of questions and we want to answer them all, but unfortunately, we don't have time as of now. So before we conclude, I'll just hand it over to Manmohan to have some concluding remarks on the session.
Thank you, Anjali. Look, I think extremely interactive session, and really appreciate all the audience members who participated and raised some very relevant questions. So whichever question we have not been able to answer on the session, we'll try and get back to you separately as well. But really very thankful, Aiyappa, for you to take the time out and share your insight around D2C. Clearly, I mean, just listening to you, I've become a bit of an expert myself in terms of D2C. Otherwise, I've not been very closely following this particular sector, but really appreciate you sharing all these insights with us and also the audience. And thank you, Anjali, for moderating it, and Shailesh for your anecdotal case studies that you have shared with everyone. So really appreciate. And so thank you, everyone. Thanks for the time, and maybe look forward to a similar session sometime very soon.
So thank you, Aiyappa, thank you, Manmohan, and thank you, Shailesh, for enlightening us today on various topics on the D2C market and the private market investment opportunities. And thank you, everyone, for taking out time to join us for this webinar. We keep on hosting such educative webinars on different topics. So keep following our page or our LinkedIn page and our website to get to know about some future webinars. So thank you, everyone.